Hi, I'm Rosie Bell with IMN, and I'm joined by Jeff Klein, Executive Director and Principal at SVN SFR Hub Advisors. Jeff, welcome. How are you doing?
Welcome. Thank you very much.
Thank you. All right, well, we're going to talk about a few things today, but can I start with what is the difference in rent between scattered existing homes and build for rent?
That's a great question, and we just actually shared some of that new data that was just revealed in April of this year. And typically, depending on the market area, the MSA across the nation, typically you can see anywhere from a $400 to a $750 per month of rent premium when you look at built-to-rent new construction versus older vintage scattered SFR.
Okay, well, following on from that, I mean, we saw in the opening presentation that renting is around $1,000 less per month than owning the same home. So comparing high interest rates, forcing potential homeowners to risk versus the politics of continued rent raises. Do you see these savings continuing in the near term?
That's a great question. We've seen savings since year 2000. There's only been 4 years since then that rental hasn't been less expensive than owning. When you take in consideration the mortgage payment, the insurance payment, property taxes, and maintenance and upkeep, definitely rental has typically over the last 23 years, with the exception of 4 years, been less expensive to rent than to own. And you're right. Right now, the new stat that we just received a week ago, it's about $1,000 a month less expensive to rent a home in the United States. This is just on average. And it's the same home, same street, same floor plan, same home builder, same city. So it's exactly the same asset, but it's $1,000 cheaper for that family per month to rent versus buying that home.
Oh, okay. So what do you think actually is the impact of cap rates in terms of how the market is trading? And, what are current debt spreads looking like at the minute?
Yeah, again, great question. When you talk about debt spreads, what I tell you now is not going to be valid in 5 minutes. It's literally changing that quickly in today's capital markets. I actually just arrived here from New York City, met with several institutional debt providers, and it is just a ever-changing program, obviously, as far as cost of funds. In regards to your cap rate, we've seen the cap rates increase. One thing that I mentioned in the opening presentation this morning is this is our first IMN in the SFR industry over the course of the last 13 to 14 years that we've been in a negative leverage climate, economic climate. So that's interesting because that has, of course, driven cap rates up for acquisition on both existing assets as well as, and particularly in the built for rent space. So what used to be maybe, as an example, a say 4.5 or 5 cap acquisition a year to year and a half ago, probably has moved up to a 6 or 6.5 cap, only because cost of funds typically in today's market are going to be 6, 7, maybe even 8%. So you always want your cost of funds to be less than your acquisition cap. So cap rates have raised substantially over the last 14 to 16 months across the country, literally in all markets.
Wow. Okay. So how is investor appetite, affecting valuation and spreads then?
Great question. Two different segments. When you look at scattered asset, existing SFR is what it's called in the industry. That's older vintage. So that might be 5, 10, 20, even 30, 40 years old, depending on the market area. So those, investors continue to try and buy that product, but it's very difficult with the cost of funds, quite frankly. We're just seeing within our brokerage company actually quite a bit of activity the last 45 days. So it's what's happened when you're buying older vintage SFR. Typically, you have an inspection period because you have to inspect each home. Typically, that's anywhere from 45 to 60 days. So the challenge has been the last year, as the feds have increased interest rates about every month, is a buyer, you put it under contract, say January 1st, to close on, say, March 1st, but you don't know what the interest rate is going to be March 1st when you close. So there's been a big pause in the marketplace for about 6 months, plus or minus in all cases. But one thing we've noticed the last 45 days, there's conversation, there's speculation that the Fed interest rate increases are going to pause and or soften toward first quarter next year. So that's all good news, and it's given buyer confidence. So we've really got high velocity and a lot of buyer activity going on today that literally didn't exist 60 days ago.
Oh, wow. I mean, Jeff, you've shared so much expertise now, and you even opened the IMN conference. SVN has been working with IMN for a long time now. There's an ongoing partnership. What for you is the value of attending? Why is it important for you and your team to be here?
Oh my gosh. The first thing we did when we made the decision to specialize in SFR portfolio sales and built for rent portfolio sales was actually become the exclusive lead sponsor of IMN. We probably had no business doing so back, that was about probably 6, 7 years ago. But we made that decision and moved forward, and it's the best thing we ever done, quite frankly. The contacts and the brand growth over the last 5, 6 years directly related to the 2 conferences that we lead sponsor has been incredible. Then that bleeds over actually into IMN's Built for Rent and Land Home Builder Conference that's in Nashville and Vegas, where we're a secondary sponsor. Same thing holds true. So it's just been a terrific experience and frankly the best money that we've spent.
Jeff, it's such a privilege to speak with you today. Thank you so much for joining, and can't wait to see you at so many future IMN conferences.
You'll see me there.
Thank you
very
so much. Thank you.